All right. Good morning, everybody, and welcome. I didn't really want to cut that song off, but I had to. There's only 3 minutes to go to the cash open. It's one of the greats, man. It's one of the greats. SPOOs this morning are down a massive one handle. The market's got 3 minutes to go to the cash open here on this Thursday morning. There's not much going on in the overnight trade. So we're doing about 153,000 contracts. We moved from here to here, which is not very much from there to there. Jobless claims came out this morning. Yeah, yada, yada, yada. Yada, yada, right over the best part. The mover this morning that you should kind of pay attention to, the bond market, we crested all the way to 118.23 ticks. We've pulled back a little bit. We've pulled back by like a half a point. It's not huge, but there's clearly a notion that the bonds are in charge. And why do I, say that? Well, look at the volume in here. The volume in the bonds lately has been exceeding, at this time in the day. And again, the bond market, though, kind of technically opens like an hour before the stock market, yada, yada, yada. But the bond market volume is exceeding the S&Ps. You should pay attention to that. The notes, the notes are doing, we're almost at the point of rolling. We're almost rolling, but the notes are doing almost 1 million contracts, at this point in the morning, which is huge by huge. And that speaks volumes of what's the driver in the marketplace. We have a bid back to the dollar. The dollar has gotten whacked pretty hard in the last, yesterday. Again, there's a few big down sessions in here, but generally speaking, yesterday was the big one. I know you're looking for the 50% retracement. I know you are. Anyway, this morning, this morning, trade will come down to one aspect. Look, there's no point when the marketplace is unchanged. There's no point talking about advanced decline line because it's going to be sloptastic, right? There's no point talking about ticks because no one's going to care. All that's going to matter this morning is, are we going to pull back to the 5290 inside of the SPX? That's it. That's all that matters. And you only have to slip down very mildly from where we are, just mildly down, and we get pulled right into it. My thinking is, you're just about 6-7 handles away from getting pulled back to the 5290. It's something that I talked about in last night's video, not exactly like the most, enthralling trading sessions. Everything happened, yesterday in the middle of, CPI and yada, yada, yada. And here we are, trading at 5308. So we're going to come into a cash open this morning. We're going to be fairly sloptastic. To point out any underlyings, yeah, Walmart had earnings, and actually their numbers were good. And I sound surprised on that one because I actually am. All right, let's come to the bell, get a feel for this sloptastic trading session. Let's get into it this morning. All right, we are open and talk about sloptastic because it's there. Okay, it's a sloppy day. So we are looking right now at an advanced decline line that is pretty much 50-50. Not every stock is open. I saw that again yesterday. We are seeing order imbalances in the morning. Additionally, if you're kind of curious about ticks, as I said, don't worry about ticks. Don't worry about the advanced decline line. And it's a pretty accurate statement because there's no tick whatsoever. So I'm going to, almost immediately cut to the chase. By the way, there's some movement here inside of Meta in early trade, some slippage. Meta had a good bid under it yesterday, maybe cooling a little bit today. All right. So as I said, I'm going to cut to the chase immediately and go to a 1 minute. Okay. And just bring this into focus. Your trading day comes down to this 5290 period. There's no, if and or but about it. The edge of the expected move, okay, is where risk would be comfortable. Right now, we are very decisively outside of that range. So 52.90, and we've talked about this pretty much ad nauseum, but and not just about the 52.90, just about edges of expected move. 52.90, okay, is obviously the place where, you know, risk kind of goes and dies down. But you have anywhere from, we should call it 12, maybe even 15 points of range around the edge of expected move. And you go, well, that's pretty big. So anywhere from 12 to 15 points is pretty reasonable. And you cannot peg that perfectly. You can't. And what happens when you trade, and again, I'll just display this. What happens when you trade, for example, 12 points outside of it, which is somewhere in this neighborhood, right? Which is like 53.02. Well, what happens is, okay, anyone that has risk, which is the dealers, okay, the dealers, market makers, anybody that's making markets, hedge funds, gamma risk, traders, the second you get outside the edge of that expected move, this is their one standard deviation. Here, kind of explain it like this. So there's your standard deviation, okay? Throughout the course of this week, we've actually rallied up to here. Now they're comfortable anywhere inside of that one deviation, but the second you get outside of it, that's that line right there. You have to turn on your hedge, okay? And by turning on the hedge, you're actually going to move markets considerably. Now, turning on the hedge would imply, okay, that you have to buy, okay? You got to buy out there. And when I say buy, the second, okay, that you trade outside of it, you have to turn on your server and buy into buying. And it'll actually cause us to explode off of these levels. So you kind of meander, you know, inside of an expected move range, right? This is meandering, by the way. And all of a sudden you come up to the 53.02 and boom, we accelerate. And you will see just that. So yesterday into the close, the first time we really broke it was right here into the close. And a lot of people didn't really get that feel because it was closing volume anyway. Closing volume in the S&Ps was pretty dramatic, and it always is dramatic, okay? But the point of me taking you into this is that volume really started to surge right when you actually kind of came off that. But again, you know, that's into the close. Nevertheless, you notice that I jumped. You'll notice that I jumped from the SPX immediately to the S&Ps. It's because these futures are the natural hedge to the SPX. And this is a tradable opportunity here. If we come down, you know, somewhere right in this neighborhood here, let's say 53.04, 53.03, you come down into this neighborhood, which is, you know, 10 points from here, then all of a sudden you start to get driven into this. We're not there yet. We're simply not there. And again, right now, the markets are, as I said, they're meandering right now. Okay, meandering. So somebody else said they had volume issues. I'll go look at it again. The thing keeps resetting itself. You know, it keeps resetting itself. Oh no, this should be working. Don't. Here, I can even mess with it. All right, we'll leave that there. All right, onward and upward. So S&Ps at this point, you know, kind of like on a knife's edge, you know, somewhere again right over here. They just boom, drop in there. And look, what I'm trying to also get at, don't, okay, get too excited if you start to see, you know, buy side or sell side in here today. You know, buy side, you probably meander back, but sell side, you get driven pretty much to the 52, you know, 90, and it would probably stop there. Anyway, with that being said, let's come back over here, look at the Nasdaq a little bit. Just a little mild sell side activity in the Nasdaq. The only thing that I see in the Nasdaq that's a mover right now is Meta. Okay, everything else is just, you know, squandering right now, floundering back and forth. There is movement in the bond product right now that could definitely impede upon these S&Ps as this day kind of progresses. The financials still have a bid under them. I have to tell you, of all the areas and all the sectors, okay, that one is the most surprising, to at least to me. Financials, okay, big gains. And again, like, where do you go from here? Can you explain why the financials have big gains? No. It's interesting. Okay. By the way, Darren was asking me, SPX, is it normally a half hour mark before the close? I'm not sure exactly what you're asking, Darren. I'm not sure precisely what you're asking. I mean, the SPX, okay, the SPX closes right at 3 p.m. Central Time. I mean, but the options continue to trade 15 minutes thereafter. I'm not sure exactly the question there. Nevertheless, down to the energy sector, there's nothing going on here. Ticks are starting to pick up to the downside, but I wouldn't read into it much because I can see Microsoft has a bid back under it in the last 2 minutes. Apple has got a bid back under it in the last 2 minutes. Okay, Amazon, same thing. Okay, well, again, no, floundering around over here. So with that being said, Caterpillar's taking a hit this morning, but Caterpillar's taking a hit because of Deere earnings, right? John Deere traded down quite considerably this morning, has a bid back under it. It's still down some $10. By the way, just to throw this out here, has anybody here looked? We were talking about Charles Schwab, obviously, and the conversion has happened, and there's already things breaking on the platform. Think back doesn't work anymore. Okay, let me just say this: think back, and I want to make this clear. I don't know when it's going to work again. It does not work. Period. Okay, it's wrong. It does not work. The data on here, okay, is not accurate. If you take a look at the SPX, and I'll give you an example of why I'm saying this. If you take a look at the SPX in here, okay. No, is the volume screwing around again? I'm looking around. Looking at the no. Volume good. Volume good. Anyway, if you take a look, I'm just gonna set this by hand. If you take a look at the SPX, that was not its movement yesterday. Okay, price action in here is wrong. The expected move is wrong. I don't know what else to say, okay, other than it's wrong. So just to give you a quick heads up on that particular front, it's all wrong. So you got that good, okay? Yeah, this data in here that could not have been, like, if you think about it, that's not yesterday's close. That's actually the day before's close. So somehow they're taking the wrong snapshot data from the wrong day. If anybody does have contacts there, you feel free. I'm done. Okay, I am done. I don't really communicate with anybody there because the feedback is like, yeah, we got 10,000 other things to worry about, man. Okay, people are still saying, please, more volume. Huh. Interesting. Okay, interesting. The same headset as always, man. I can turn things up though on my side. All right, there we go. All right, onward and upward. The whining of the grandkids in the background. Okay, at least they're not puking. Okay, give it time, people. Give it time. Anyway, think back is dead, which is gonna make me have to like write down my expected moves. In the near future. Nothing really going on in positions. I have frustration in the TLT, which has got this fairly spectacular bid under it. Obviously, I needed to roll over. Question is, do I have enough time left for the TLT to roll over? Survey says 22 days, about a $2 and change expected move. It's going to be cutting it close. It takes us back at least to the long strike in here. So for the time being, if we take a look at probability of touching, so if people kind of ask, should I exit the TLT trade, right? We're losing money in the TLT trade. By the way, this is an in-out spread. And when you're looking at this, yeah, this trade sucks. But then you look at the probability in it, this probability of touching, and you're still at a 52% chance of touching the long strike. You have to leave it on. That's one that you have to leave on. And with 22 days left, it is still well within the wheelhouse of acceptability. When it starts getting below, when this number, okay, this probability starts getting below 45%, that's when you're like, it's not exactly time to throw in the towel, but there becomes diminished, ability for the trade to come back. And that would take about another 50, it takes about another, 40, 50 cents move to the upside for us to drop to that probability. By the way, I'm just calculating by looking here at 52%. I can see a 50-cent move, a 50-cent move higher would take us to a 41%. Okay. And then the trade basically that we paid, let's say we paid, 80 something cents for is only worth 30 cents. So there's some salvage value to it, but I'm going to let this one sit out there for the time being and go for it. Okay. Anyway, let's kind of continue onward and upward. Well, I'm looking for a couple of other trades. I'm shopping a few trades right now, and one of the things that I'm kind of up against that I think is getting tougher. Okay, the skew is ripping again, so we're back to it. And when I say ripping, look, we've had, for those of you that don't necessarily look at charts like this, but you have to pull up a line chart here because skew is only calculated at the end of the day, but skew is right back up to the 140 handle, which is high. I mean, you look at this year, you're like, oh, it's kind of low for the year. Yeah, but when you start pulling up like the history of skew, it's high. It's really high. It's not as high as a 160 earlier on in this year, but here's the entire history of skew. Okay. And you can see like a 140 print is really, really high. So skew makes it at this point impossible to put on like bullish trades in something like spiders. Okay. It's really impossible to put on the bullish trades in something like spiders in here. So by the way, I don't know why anybody's talking about rolling. We have way too much time left to roll anything. Okay. It's 76 days, way too much time. So give it time. You can't roll 76 days left. It's crap to roll to. So I can explain that in a little bit more detail. Maybe I'll save some time for that tomorrow and talk about roll values tomorrow and why rolling wouldn't have worked very, very well in here. Anyway, with that, yeah, I'm seeing some issues. Somebody was talking about thinkorswim. I am seeing some issues. It's all right. I've had a lot of brokerage platform issues lately with several of the other brokerages we work with as well. So I'm actually talking to another brokerage firm today on the future side of things because I am so upset about TradeTRADE being bought by Ninja. Okay, just it's been terrible service ever since that acquisition. These acquisitions are killing it industry. There's like nobody worth going to. I'll discuss that more in the future. Nevertheless, as I was saying, I'll talk more about roll values tomorrow when I've got a little bit more time. Here on Thursday mornings, I'm just, you're opening up the screen right now and the S&Ps are massively unchanged. And, there's not a whole lot of setup in here. The one thing I would denote is that the bonds and the notes start to back off, okay? That could actually cause maybe a little bit of selling into a few of the tech stocks, like Amazon was bid. It's fading a little bit. Let's go look though specifically at something like Walmart this morning. So Walmart earnings, okay, and again, I am surprised over here, right? It's what was interesting about the Walmart earnings is they were actually talking about like this high-end consumer, okay, that is moving to Walmart, which is also interesting for Costco. And you can see Costco is running up a little bit on it. Target has got a bid under it this morning. It's moving everything. Okay. And this is surprising because all around us, we're hearing about the consumer starting to crack. But, Walmart is probably the last place that's, going to feel a significant amount of that. The expected move in here, and again, if you go to think back, I just want to show you, this is when I realized it. The expected move in here seems to be working for some of the equity products, but lo and behold, your expected move was almost doubled inside of Walmart. Look, that's the big earnings today. That is boosting a lot of the retail sector. Speaking of retail, this is the Spider Retail ETF. Okay, obviously it does not. Okay, does not include Walmart. I have been looking for positions in here as it's come down dramatically in the last 2 days. I am very bothered by the fact, though, that this is hard to borrow. Makes me not necessarily want to put a short position in it. Okay, so anyway, onward and upward. Okay, somebody saying 36 days to expiration. Okay. By the way, James, we're talking about a different trade, but anyway, onward from here. So the XRT, the retail ETF, okay, obviously different underlyings because there's consumer staples, okay, there's consumer kind of discretionary. It goes on and on, and there's XRT, okay, there's XLP. So this is more of consumer staples. Now this, okay, would include none other than something like Walmart, okay? Obviously this breaking to the upside. I just wanted to bring this up. And then we also have XLY, okay? And this is actually going into consumer discretionary. So there's, there's a ton of different retail ETFs and consumer staples ETFs. There's a ton of them, but there's 3 that, I shop around for trades in these 3 continuously. XLY does not do it for me. The reason XLY doesn't do it for me, this one is all Amazon and Tesla. In fact, okay, if you can bring that up in a second, I'm actually going to bring up a page and show you exactly this because I think this is rather important. Okay. We come in here to XLY, bring it up right here. Okay, so this is consumer discretionary. As you actually look down, these guys change their crap too. Why does everything suck these days? Okay, anyway, here's your holdings. Okay, your holdings are Amazon, which is 23%, almost 24%, Tesla, and the Home Depot. So it's my opinion that the XLY really isn't all that tradable. Then we cruise over to, it's moving around on me. It's pissing me off. Okay, then we move to XLP. XLP is consumer staples. Now, consumer staples is bid, so you assume that it has Walmart in it. If you assume that, that's correct. But it also has, and this is such a weird thing, the consumer staples has Procter & Gamble in it. You're like, that doesn't even belong. I agree with you, but it's a lot of Costco. And why is Costco in here bigger than Walmart? I don't know, man. I don't know. But if you're into smoking, it's that too. And there's a lot of smoking and toothpaste companies. And oh my, these things are kind of screwed up. But I like XLP. Okay. And then there's last but definitely not least, XRT. It's just, it's funny because you don't really know what you're trading until you actually come in here. When you go into XRT, listen to XRT. This one is by far and away the most diverse in terms of, like, I don't necessarily agree. Oh, Boot Barn. Yeah. Has anybody actually been in that place? I've never been in a Boot Barn. Group 1 Automotive, I'm sorry, but they're only 1%. Okay, they're only 1%, but this is the most broad spectrum across a very large spectrum of different retailers. And the one reason I'm bringing this up is we come back over here and go into XRT. Okay, I wanted you to see, even though Walmart today has got good numbers, it had kind of a pretty critical reversal, the last few days. And even with markets hitting all-time high, this is reversed. Okay, as I said to you though, The thing that bothers me in here, it's hard to borrow. So you could get a situation where the XRT sells off. Just bear with me for a second, sells off, and bam, it's going to explode back up as some of those shorts start to cover. So it makes it a little bit more formidable, if you will, to want to trade in some of these products. This is the kind of crap though that I don't necessarily think people see on a day-to-day basis, right? That's I think that's pretty critical in there. That we kind of discuss that from time to time because, as I said, I just don't think like a lot of people necessarily see, what is XRT. Did you miss the fact that it's hard to borrow, but at least it's a very wide spectrum of underlyings. Okay, the world right now though is betting against retail. I think that's the summation of being able to look at that. Okay, a few other underlyings. As I was saying earlier, okay, Nike is on the move, but Nike is, hey, you know what? Bid back. Interesting. Nike was down in pre-market quite considerably, but Nike was down because of Under Armour, which, there you go. Under Armour bid back. Must be the conference call. Under Armour was down big off of earnings. Big. Okay. Big. And it's back. That candle is real. And it is a big one. The other one I saw was Goose. This was actually a tradable product for a while. Okay. Canadian Goose, Canada Goose, Canadian Goose, whatever. This thing was tradable for a while. It's kind of dead, but it's got a big 25 or 24% bid under it today. What else we got? Okay. Cisco had some numbers. Stock's actually down. Their numbers, though, weren't bad. Stock actually reversed a little bit. I saw Baidu out and up earlier. Okay. Interestingly enough, Baidu was completely reversed. I saw this like super early this morning. It was actually up. The reason I'm looking at that Baidu is because we have a position that I put on an FXI. FXI happens to be a little bit higher this morning. This thing is pretty amazing, right? This could be the short squeeze of all short squeezes, but I actually have a put ratio back spread in here. We'd have to come down though, but look, I got 36 days and this one is feet to the fire. A back spread like this, unless the market moves down considerably, you don't even bother looking at this back spread until about 20, 30 days from now. I look at it because I think people are interested in it. But anyway, the back spread, when you look at it, you're like, you're down 3,000%. Yeah, 3,000% can be like 10 cents because the trade was put on for a very mild credit. So don't get ahead of yourselves over there. And as I already said, Deere is impacting Caterpillar. Caterpillar seeing some sell side. Look, other than that, there's just not a whole lot going on this morning. It is slop-tastic out there. The ticks are negative, but kind of a moot point because they're negative 100. The volume sucks. Okay. And in terms of catalysts today, are there any catalysts? Well, this is kind of important. Okay. There's a Fed balance sheet. Ooh, but still my heart. No one cares. There's a lot of Fed speak today. Fed speak. And that Fed speak could generate a little bit of movement to the overall marketplace. And that's why, one of the things I am a little bit surprised at, the Fed speak has been very hawkish lately, at least in my opinion. They're all saying, don't worry, higher for longer. Neil Kashkari spoke. Well, all the monkeys are speaking today. I think there's no less than like 3 or 4 Fed speaks today. And in light of that, I would look for the bonds. If the same tone continues, I'd look for the bonds to actually revert back down somewhere in like the mid, 116 handle. Again, we're trading 118. I would look for, between now and the remainder of this week, a pullback inside of the bond market. Okay, I'd like to see a pullback right in this neighborhood here. And that's what I would kind of anticipate if the Fed speak continues along its way. The expected move, again, for those of you that joined us maybe a little bit late, the expected move, it's already been tagged to the upside. Okay, look, there's no surprises in the tape that you're seeing right now, other than we're just outside the expected move, right? There's still a very high probability that we pull back in here. We'll see. Okay. I mean, there's no commitment right now. It looks like on either side of trade. What got us here is tech came back alive, specifically stocks like NVIDIA. NVIDIA, this one's worth watching right now. Okay. This is worth watching because it's at the breakout territory. You know, once, twice, third time's maybe the charm. Okay, we are right at the top of NVIDIA. If there's one thing, okay, and one thing only that is incredibly bullish for this trading session, okay, and tomorrow's trading session, it has to be NVIDIA. All right, like it doesn't matter what anything else does. If NVIDIA actually breaks to the upside, it's going to do it in a fierce manner. And when I say that we're close, okay, we are literally, you know, basically pennies away from seeing a squeeze to the upside in NVIDIA. It's easy to borrow, but the squeeze that you're getting would be all about gamma. And there's no question that looking at the call buying in here, they're trying. Okay. They are absolutely trying. There's a lot of calls being bought in NVIDIA. Take a look at the intraday trade. Okay. Pretty chaotic to begin with. Doesn't mean that NVIDIA, like, it doesn't have to happen today. Okay. But it is important. Okay. It's important to know that NVIDIA is right on the cusp of what I would actually term a big breakout. And that is, I mean, kind of sitting on pins and needles waiting for that one. Again, back over to the dollar for 1 second. The dollar continues to climb. This is, okay, if you would, if there's one really bearish theme for the marketplace, the first time we've actually seen a bid back under the dollar, okay, in some days. And this is pretty significant bid back to the dollar. I was joking earlier about a 50% retracement, but we're home. We'll see. We'll see if this actually pushes. Okay. You know, like the bearish theme today, if there's a bearish theme, the furthest we're going right now is what? You know, 52.90, which is, I mean, that's, you know, 20 handles away. I don't see even 20 points of movement, though, packed into this marketplace. In fact, what's the expected move from this point forward? Okay. How much have we crushed volatility today? And the survey says significantly. So we've got actually volatility projecting just from this point forward, only a 15-point move. The reason I'm bringing that into scope is like the marketplace is like, I'm too tired to even get back to the 52.90. And that's, you know, consideration in here. So yeah, the NVIDIA trade, that's where it's at right now. There's call buying in here. Okay. It is right up against what could be a pretty critical breakout for NVIDIA. We'll see though, it could be short-lived. Tesla, nothing going on. Meta, some sell side activity. You know, I'm interested in Meta though, because it usually follows NVIDIA. Hopping on NVIDIA's coattails. There's nothing going on though in here today. Okay. With that, I'm actually going to turn it over to Tony Rago here right now. And as Tony does come in here, he's going to trade a couple of Nasdaq futures with you. And you know, funny enough, the Nasdaq, it's slow, but it's still moving. Okay, there's still range in here, and that's all he really needs for setup. So stay tuned. I'm going to bring on Tony Rago back on here in just about 1 minute. Thanks everybody for tuning in for the first 30 minutes here of TheoTRADE.